Welcome to the Entrepreneur's Logbook podcast, where we uncover the strategies and insights driving extraordinary business growth. My name is Zachary Bernard. I'm your host. And today I'm joined by Frank Cid, general partner at 28 Ventures. Frank has spent over the last 2 decades helping companies grow from early stage startup to successful exit, and has built an impressive track record of identifying and nurturing these high potential companies. Through 28 Ventures, he's developed a very comprehensive approach to supporting founders, connecting them with the right resources while helping them shape their strategic vision. Frank, it's great to have you on the show.
Hey, thank you so much for the kind words and the kind intro. I'm very surprised myself when you say those things because I don't really see it that way. I've been just under 20 years in the industry. I guess it is going to be 20 years.
Oh,
I sometimes forget my age, but I
there you
still
go.
feel like I'm 22 years old, man.
Fair enough. I think probably like the best place to like start this would be to perhaps get like a bit of background around like your obviously like your expertise. You've obviously started into like the investment banking space, and then now you've moved obviously to like running 28 Ventures. You founded multiple companies. So could you just give us a bit of background about yourself, your career, and then perhaps we could obviously touch a bit onto 28 Ventures as well?
Yeah, absolutely, absolutely. So, my background, interestingly enough, did not start in finance. I didn't come from a network of people on Wall Street, which is usually how, when I started, people got involved. It actually came through my older sister's, at the time, boyfriend.
Okay.
I'm still friends with him to this day. He was a mentor for me, and it was around that time that I was just kind of getting out of high school. I didn't really know what I wanted to do. I had some ideas. I come from a blue collar background, so a lot of my peers were going into jobs that were more on the blue collar side. The only connection that I really had to knowing that I wanted to be on Wall Street is when I was in elementary school. No, in junior high school, there was a program that at the time it was called Chemical Bank, now Chase, where I got
Mhm.
to go into work at a bank.
Hmm.
And, it was like an after school type thing,
Oh
or
yeah.
type of like a field trip type thing. And I remembered how cool it was to just go into the office and you had these people that it seemed like they were doing something, something different from breaking rock or whatever. Not that there's that I have a problem with that, but it was just different from my world, and my brother-in-law, he was a young broker on Wall Street. He was like, hey, why don't you come in, and before you take that, I had a job lined up somewhere else, so it would have taken me totally different place. But my brother-in-law was like, hey, before you take that job, why don't you come here and see if this is something you would like, because I think you'd be good at it. And that's what I did. I went to work with him for a couple of years, and interestingly enough, I've been in the business ever since. I married the game, so to speak.
So like when you were saying like these like after school type thing, were you referring to like the career day where you go for like an entire day, you see like how everything works, or
Something like that. It was a little bit
okay.
long, I recall. It was a couple of weeks type of program, kind of
Okay.
like an internship type deal. It's so long ago, I don't remember the exact specifics of it, but I remember being like, man, like I would love to do this every day, like go into the train in the city and wear a white shirt and a tie, make my dad proud. Uh,
Yeah.
and, I also saw the movie Wall Street, to be honest with you, and I remember like thinking like, wow, people can do that. Like this is crazy.
Yeah.
And I have a funny story if you don't mind me sharing it, if you have
Yeah,
the
of course.
uh, but I remember that back in, like, I forget what it was. It was like the late 80s. It was the late 80s. And at this point, I had seen the movie Wall Street. I'd started reading the Wall Street Journal. I was a kid. I don't even know what the hell I was thinking. Like, and thankfully, my parents encouraged it. My parents are, even though they come from a blue collar background, my dad encouraged and really championed, like working in an office and getting those type of jobs. He just didn't know how to get me into that. To
Yeah.
him, he's like, I hope you become a real estate agent or something. That's like the easiest, not that it's easy, but the easiest barrier to entry for us would have been
Mhm.
that. And I remember just being a kid, and I was TWA, the company TWA had declared bankruptcy at the time.
Mhm.
The stock got crushed. And I remember my older sister, Jamie, I go to her, this is the time to buy the stock. It was like in the pennies. And I was reading the tables because that's how you had to read back in the day. You have to read the stock tables. And I tell my dad, like, hey, we got to buy this stock right now. My dad's like, get out of here. What are you talking about? And
Yeah.
I didn't understand. And to this day, I still don't understand. I don't take no for an answer. Many times I started calling, I went to the yellow pages and started calling broker dealers, like brokerage firms online, like just the first ones that I could find. And I'm like, hi, how can I buy TWA stock? And they're like, are you a kid? Get off the phone. And interestingly enough, TWA actually had a turnaround, and the stock actually ended up coming back like a year or two later to like $12. Wish my dad had taken me up on that one, but that goes by way of the time I told him about Bitcoin, and he did.
Same thing happened to me. I think I was like 10. Why don't you buy some Bitcoin or something like that? And he didn't want, but I ended up finding a way to buy some. I didn't get too much, but it was still a little bit. But no, I love that. So you somewhat had this like attitude that anything you were going into, even if they would tell you no, like you would try to like make it work. Like you would be
Yeah,
calling like the
it's.
brokerage.
I mean, listen, I come from an immigrant background where my family comes from the Dominican Republic originally. My parents didn't come here with anything, and
Mm,
for how they made it, they got a lot for
yeah.
them, and I'm very proud of my family. And also my dad fostered that into us of like, find a way to do something. There's other things that kind of like, a lot of immigrants are like kind of like play it safe, go get a degree. I didn't go that route to
Mhm.
disappoint my parents at the time. But they did instill that thing in me of like, hey, don't, just because somebody says you can't do it does not mean you can't do it.
Mm,
Those rules don't always apply. So,
yeah.
I did get that from my family, and also my friends. I personally, I'm a Brooklyn guy. People from Brooklyn, I think, tend to be that way. It's a different vibe. It's a different place.
Yeah, that's fair. And I guess like one thing I would be curious about is like obviously you mentioned that you started not in like finance like right away. You ended up going to like finance. I think you worked in like this company for like quite a while, and then you ended up starting like your own companies. I think you founded like a total of like three companies, if I'm not mistaken.
Well, no,
Four?
I started in brokerage as
Okay,
a
yeah.
broker, and what I mean by that is that I got licensed in 2000, I forget, 2003, 2004, something like that.
Mhm.
I had a small broker dealer, and at that point, I didn't know what I wanted to do with my life, and I just didn't have the connections to get into venture capital. I didn't know how to
Okay.
do it. I didn't. I had no idea. So my thing was like, all this time, I'm thinking, okay, if I get into brokerage, and I had different ways of getting in through friends, family, whatever. Because it was like this kind of crazy thing that happened in a lot of parts of America where a lot of people in the blue collar world did get into these jobs, and
Mhm.
the tech bubble happened, and there was so much money floating around.
Yeah.
And I did help some private companies early on, but I didn't even know that was venture capital. I didn't know at the time what I was doing was venture capital. And
Yeah.
some survived, like not many. Most of them went bankrupt or went to zero because the bubble burst. But interestingly enough, I ended up going to this broker dealer, and in my mind, I thought what I do now is what I was going to do then. Instead, it was more like get on the phones, get accounts, open up investors. And not that I hated it, but I always knew that there was something kind of more for me there.
But
Uh,
yeah.
and I always had an affinity to, instead of like buying a stock, which is what most brokers would do at the time, I like private companies. I
Mhm.
like the idea of investing in them before they were public. I like the idea of investing in an IPO
Yeah.
and capture that growth. And I did read a lot of books on investing. I had a couple of really great mentors that were phenomenal traders, guys you'll never hear about,
Mhm.
but I saw what they did trade for people. And that's really kind of what shaped and molded me up until I was able to break out on my own and start 20 Ventures and another one of my companies.
And I think like one thing that you mentioned was like interesting is you mentioned like investing into like the growth of these companies before even they're like public. Like they might be private companies, like IPOs, etc. I guess like one thing I would be curious about is you somewhat took that same approach with like 28 Ventures, like being able to like support these companies through their growth, etc. And I guess I'd be curious like how you ended up launching like 28 Ventures and somewhat what somewhat inspired you to like approach like supporting founders in a way.
Well, you know what it is my partner and I started 20 Ventures really to invest in unicorns. So we had invested through various different types of assets that are out there, and through different SPVs and broker dealers. We invested in like Patreon, we invested in Kraken. Some of these were on the cap table, some of them were not, especially the early ones, because we just didn't have the reputation, we didn't know the people. So my partner did come from a background of investment banking. And
Mhm.
my partner Nick, he did come not so much from investment banking, but he was kind of a deal maker. He had already been the CEO of a company in Asia. He had moved from Asia to Canada. He was trying to find, what was going to be his next iteration. And I met him through the retail brokerage firm when he was bringing Chinese deals to America and consulting with them.
Mhm.
Through that, we became very good friends, and
Yeah.
we just had an affinity to this thing. And when we started 28 Ventures, we're like, hey, this is an opportunity. These unicorn companies are doing crazy. They're going crazy. Maybe we can catch lightning in a bottle. Let's, put some of these together. And then realize that, like, they're not going public. Like, these guys are just raising money at a higher valuation. And we're like, when are you going to go public, Kraken?
Yeah.
When are you going to go public, Patreon? And we don't, we didn't swing the line or have the power to call the CEO and say, hey, do this. Nor do we want to micromanage, even if we did.
Of course.
So we came to the realization that the world that we were very good at and the world that we knew was actually that kind of nano cap, micro cap space. And when we started 28 Ventures, it was basically like, look, what we're going to do is we're going to look for really promising companies that we think can go public within a 12 to 24-month time frame from when we write our check. We also do not invest in we do not invest in any operating expenses. Our money goes into the legal, into accounting, into getting the investment bank, because we're not bankers. I'm no longer industry. My partner's not. We're investors. And we do give support to the company. We give them ideas if we think that there's a way forward, or there's a potential merger that could benefit them, or while we're doing this process. And we're a lead investor, so sometimes when they're raising capital, it will make their work a little bit easier. It's just our dollars are very specific. I believe that our interests are also aligned with the investors' interest as well as the companies. And the reason that I believe in what we do, and I've told you before in the past, I like to call it public venture, is the term I'm kind of coining for this, is I think that we lost our way in the way things work now. I think companies do not go public until they're worth billions of dollars. And the little guy, the small investor, when they used to be able to buy a company at a 100, 200, $300 million market cap and ride that wave up, they no longer can do that.
Yeah. So you're basically looking for these companies that want to actually go public, not these companies that raise like $100 million, have no plans of going public or anything like that.
There's also another dynamic too, is that this business is a business about relationships. My partners have very good relationships, and I know a couple of people here and there as well. So
Of course.
we work really good in the size space we're in. If you want to go and do a deal for $1 billion, there's plenty of firms that will take your deal. They will love to get that commission. Our sweet spot is that kind of nano cap, micro cap space. It's also one of the hardest, because the flip side to going public is that now you, as the CEO, you have a responsibility to the investors. You have a responsibility to the company. They're like, now you're playing a few jobs now. You're not just a CEO of the company. So we always tell our portfolio companies, like, hey, be careful what you wish for, because you got to be PR. And this from our own dealings. And, I know that you guys know me intimately on a couple of things. Not every CEO is really equipped to be the PR person, the front page facing guy.
No.
Yeah,
They have to be ready for that, and some are just not ready for it.
Yeah, and not every CEO is ready to hear, hey, you're really not the guy who should be in the front of this. Like, you're great at managing. And everybody not every CEO is ready to hear, hey, stop managing the company, get a good person to do that, and you be the front facing guy. That's what makes it interesting. The job is great because I wake up and every day there's a new challenge, and it's to me it keeps me going.
I love that. And I guess like just going back to like the nano cap, like micro cap, like companies, as far as like just growth wise, is there like a surprising somewhat like pattern that you notice as far as like the companies that actually succeed, that actually go public, and the ones that like don't? Like I'm assuming there's not a secret sauce, but there has to be some sort of like pattern that you notice, whether it's like in the leadership team, their advantage, anything like that, or
Yeah, I think that well, first off, no two companies are alike. Every company is different, right?
of course.
Well, the secret sauce is not going to be the same for everybody. Every industry is different. Honestly, a lot of times it's just catching the right trend. If you just caught the AI trend,
Hmm.
you came out with a company a year ago and it was AI and you went public, there's not many plays, you know. We had an experience with one, a nuclear company that my partners had initially invested in. You know, they just called lightning in a bottle, you know, and the stock, it did phenomenal. You know, I won't go into numbers, but it's probably hands down one of our best investments. Uh, you know, then we have another company that is that like their tech is as legit as it comes. They have, you know, testing and they can't talk about a lot of their stuff because of the nature of their business. But on paper, this company kills all the other ones we have.
Hmm.
But they haven't figured out how to tell their story. And their their management is a little bit resistant to certain things because they're a little bit old school.
Yeah.
So there's not really necessarily a catch-all or what's going to work better. It's a couple of things. I will say though, undoubtedly, having the right management in place, and I think this is the case for private, public, whatever, having the right management that can resonate to the public
Hmm.
makes the difference. You know,
Yeah.
we have actually done deals for companies like during my broker days. I look at their numbers and I'm like, wow, this company is making like $1 a share and the stock is trading at $1. This is insane. Like it's trading at a 30, $40 million market cap, making
Yeah.
$50 million in revenue. Like there's a disconnect there. The problem is the management is bad at, you know, at basically giving that message out to the public and
Yeah.
communicating that. You know, which is again the PR aspect of it. Not everybody wants to do that.
Yeah.
So
And I guess like management wise, like sorry to cut you off. You mentioned obviously having like a good like leadership team, management team. Like how do you actually like weight in like the founding team versus potentially like a market opportunity? Because sometimes like founders that have started like multiple companies, or just starting a new one, and then you have like people that just have like really like lightning and like bottle, like as you said. Is there like how do you approach like weighting in someone that has that background and someone that has like in like the bottle type
so
opportunity?
so for us, because of the nature of the size of companies, we don't really get many guys that have started a lot of startups.
Mm,
Usually,
okay.
if you have that kind of success, you're going to have your backers, you're going to have your people. You may not even want to go public on your next deal because it's like,
Mhm.
why go public if you can own it? You know, and by the way, disclaimer to me, if you have a really good company, don't go public. Don't raise $1 from anybody. Keep it to yourself. Even though
Yeah.
that's going to cut into my business, don't go public. If your deal is that good, really, keep it to yourself, like similar to mid right?
Mhm.
Uh, However, if you have a necessity, I think startups should really start giving a look to the possibility of can we go public to NASDAQ if we raise that first. You know, I mean, it used to be like a seed round when I started,
Yeah.
what, like 500,000, 250. A seed round now is $2 million, $3 million. So it's not as simple to do that. So if you can get that and then get your company to a public market, and when I say public, I think the NASDAQ is really the one we talk about. New
Yeah.
York Stock Exchange is great too. There's certain pedigree. It's cool. You get to go to the exchange.
Mhm.
But NASDAQ, it's what's popping right now. It's what's moving.
Yeah.
It's where all the tech companies want to be. So that being said, if you can in a year's time take the capital that you've injected and invested and build a good enough story and build a good enough company and go public, I think that founders are really doing themselves a disservice because you know what? It's a lot easier sometimes to get money from the public markets if you're hitting on all the cylinders and if you're performing. And, you know, you get to keep more of your company. You don't have to, you know, because as you raise money, you keep getting diluted.
Mhm.
It's there's still dilution in the public markets, but it's a little bit different because the valuations that you would be getting in the public markets when you do an overnight, when you do a deal. Um,
Yeah.
you know, it's a lot more beneficial, I think, to the founders. Not always. Sometimes founders they'll get into death spirals and all these other things. We don't ever recommend that, and we'll always push back.
Yeah.
If our the investments is going to do that because it hurts us. But you know, to me, I think that this is really the natural progression for
Mhm.
startups. Is hey, don't stay private too long because you will
Yeah.
lose the window of opportunity.
And I know we're somewhat talking about like I wouldn't say like challenge, but perhaps like just evaluating like your current situation and seeing like, hey, like do we even need funding? Should we even go to like market, etc.? Is there like any specific challenge that you feel like the people that you work with at least come to you like looking for support? I know you obviously mentioned support with like accounting, like finance, like giving them some of that like funding support,
Oh,
cutting
I can
them
tell you right
people,
off the
but
bat, nobody ever comes to us for support.
okay.
Everybody's looking for money.
Okay.
Always. We, typically, again, if the companies run well,
Mm,
and if it's a case management team, whether first time or multiple times, they'll have
yeah.
all those things covered. Um, Occasionally, we have had a couple of companies that they're more looking for an exit, and VC doesn't really fit them. Um,
Mm,
so they need work restructuring their whole model, especially
gotcha.
these mom and pops. We have a couple of these right now, actually, that we're prepping for the next, 24 months, where they're more like, hey, we actually have great earnings. We've got a
Yeah.
lot of money on the books, but how do I leave my legacy and get new management to come in to take this over because my kids aren't going to do it, right?
Yeah.
I can sell it to private equity, but that's going to be at some kind of a discount. And they're
Yeah.
going to want me to stay on for X amount of time. Versus if I take this public and, if I'm doing, 50, 100 million in revenue, I could be
Mm,
worth X times that multiple, right?
yeah.
So we have seen, we actually have a couple of we have two companies right now that I will mention,
Mm,
um, kind of stealth mode that on paper, these companies are beautiful.
yeah.
Management is awesome. Like, and they're very much about like, hey, I don't want to just sell my company. I actually think this would benefit me more being a public entity and getting access to public markets and not necessarily quitting the company, but getting the next generation of people that are going to cement this legacy, and my
Mm,
company will survive long after I'm gone.
yeah.
So that's pretty cool.
So more like like long term, like forward thinkers, like people that are thinking not just about selling the company, being done with it, but potentially bringing the potential or opportunity that comes with their company to the public market to potentially even grow even like further and reach that next level.
Absolutely, because it's a lot easier in the right conditions in the right market to raise equity from the stock market.
Mhm.
Look, you can do if you're publicly traded, you have good value. The CEO is charismatic. He knows how to speak to the public. They're getting the right PR. They're able to go talk to. And I'm not saying anything you don't know. I mean, we're kind of talking to the audience here, right? If you have all those things running on all cylinders, being a public entity is like a gift. NASDAQ paper is as good as US dollars. So I can go raise money on an overnight for 10, $15 million. I won't owe the bank anything. I'm selling my shares. It's gonna dilute me a bit, but at least I don't have to be part of a 15% loan or an 8 or 7, whatever the rates are. Like you're just
Yeah.
getting cash that night, and now you can go and do a lot. The other thing that people don't really, I think, kind of eludes them is the shares are valuable to talent.
Mm.
You know, you can get good management. You can go hire those people that are going to make a difference.
The people that believe in like the company that you think like long term could actually help them grow. And then if they
Yeah,
actually provide the support, then they're gonna make
yeah. You can
more
go
money
hire
doing so.
superstar management. You can hire a superstar developer. You can hire because now instead of them getting these options that on paper are worth nothing, because really it's worth nothing. Yeah, that there's a 50 billion valuation, but until you catch that marker, it's worth nothing.
Yeah.
Publicly traded, you give somebody shares, it's worth something.
Yeah. They're into so they're like born to actually like help you grow the company because it's gonna benefit them at like the same time.
Everybody's interests are aligned, correct?
Yeah, and just with like the Nasdaq, because obviously I'm in like the press space. Like the first thing I'm thinking is like, okay, like if you're a publicly traded company, you're gonna go like ring the bell, like direct there. It's gonna be like good PR. So I think that's obviously like one other thing, but that's just one of like the side
Yeah.
benefits.
I mean,
And
there's a lot of other benefits too that it
of
brings.
course,
Being a NASDAQ traded company opens up a lot of doors.
oh yeah,
we get a lot of people that want to go and sell into enterprise. We get startups that are like, I want to sell to the enterprise. They forget about the consumer. They're not interested in consumer.
Mhm.
And I'm sure you know in your world, a lot of people are trying to sell B2B. They don't
Oh
want
yeah.
B2C. That's the big buzzword now is B2B, even though ChatGPT is B2C, right? And they're the fastest growing company ever. So if
Yeah.
you're a startup, don't not B2C. But everybody wants to sell B2B. But guess what? When you're going into AT&T, when you're going into Verizon, their most important thing is okay, we have this company, they got a great tool, we can use this, we can even sell it for them. However, are these guys going to be around in 5 years?
Mhm.
Are they going to be around in 10 years? What is the redundancy for this company? And
Yeah.
having that symbol, it gives you a credibility. So to me, I think that's also important. And
Yeah.
that's kind of like where 28 Ventures can come in, because it's not even just about, helping you go public and consulting you in that ride. It's also our long-term partnerships and relationships with people we know that
Mhm.
can get you into the door after you're publicly traded.
Yes, so you're investing in like their future in a way by giving them access, like the connections you have, and
Our
obviously
shares are
like the
typically
capital.
locked up, man, so we can't have the
Yeah.
first year of the company not being unsuccessful.
Well, that's why there's a due diligence process. But just going back to like what you said, like with like the Chat GPT and stuff like that, I know that's obviously more like B2C focus. But one of the things a lot of people like don't think about is anyone consumer oriented is going to think Chat GPT. But if you are more B2B, enterprise, etc., you're going to be thinking OpenAI, which is like where like the real money is being made. And I think one of the questions, like I would be curious to like hear your take is perhaps where you see like the market going into like 2025, because there's so many like AI companies just spawning out of nowhere with like a new value proposition, and everyone's like, wow, like is
Look,
this going to be like the next company?
our next IPO is a company that we invested in last year in August.
Mhm.
Uh, it was it was an interesting play because it was a newsletter business, and great newsletter business, but also they're kind of lagging behind. There's certain things that they could have been better at. Not that
Yeah.
the management isn't good, it's just a legacy business, but they throw off pretty good revenue. And there was something here that my partner Nick saw. He said, "Hey, we can take this company and really do something special with it." The key thing was the data. They have 20 something years of sentiment data. Uh, so our plan is actually really to integrate AI technologies
Mhm.
into this data set, and not just that market related stuff, not just financial related stuff, but also things to do with sentiment analysis for small businesses of hey, if this is happening in this place and deliveries aren't happening and logistics are messing up, how will this affect my business? Because
Yeah.
everything matters. All those little things matter. Those cracks in the wall matter. That leak could become a river, right?
Yeah.
Uh, so we are very, very bullish on AI. My
Mhm.
partner and I are extremely bullish on AI. Where I see this going is, I think that the chip side of things is going to be huge, as we know.
Yeah.
Uh, the processing power that's going to be needed. There's money to be made there, uh, but the models themselves,
Mm.
they get better, and that as hallucinations get lesser and lesser, and they figure out how to do this stuff better.
Yeah.
I think there's going to be a big displacement in how we see search. How business is conducted. Your business on the PR side of things, how that works.
Yeah.
And these things are getting a little bit more human, so to speak.
Mhm.
It's not true. Like to me, it's kind of comical when people think this is like artificial. It's not. It's really just a bunch of agents that are performing tasks that gives you the concept, the idea that this is a human, right?
Yeah.
As they get better, you know, certain
It'll be
industries.
harder to tell.
Yeah, yeah. So I'm bullish on AI, man. I'm bullish on AI. I'm bullish on uh, the, the 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 chip side of things.
Mhm.
I'm bullish on the energy side of this stuff, because this stuff has
Yeah.
massive that it will need to be, which Nano Nuclear, one of our companies. So shout out to Nano. Hopefully they can they can do something with that, and actually make a reactor in a couple of.
Yeah, because I think it's really about making, I mean, at least if you're looking at like companies like investing, et cetera, you have to make that differentiation between the ones that are in for the long run and you're not just using some like wrapper to create like random software and just like call it a day. Because I've seen like so many of them. They're gonna stay for a few months, they're gonna
Right.
move to the next thing,
Well,
which
there's going
have,
to be a couple of pure plays when it comes. I mean,
oh yeah,
the market's concerned, there's not really many AI publicly traded companies. Most of them are
Oh
opting,
no.
yeah, they're opting to stay private, and raise that valuation. But
Mhm.
you're right in that a lot of these are wrappers, they're Chat GPT or OpenAI wrappers around whatever thing they want to do, whether it's trading or whatever. I don't know. But yes, those guys, look, they're going to make money. And in a sense, it's better for them to do it that way, because why are they going to invest billions into the AI models? If it's there, and some of those companies are going to be around, or or not Chat GPT, but OpenAI, Perplexity. All these guys will end up buying those guys, which is for us again why the business that we just got into is going to be going public. That's why it was important for us, because we saw the value of the customers.
Mm.
Have a good amount of paid subscribers. They have a good amount of free subscribers. So we're like, okay, wow, we can pen test some of these ideas that we want to do with the technology we're going to acquire in the coming months. That's who really is always going to win out too, man. It's who,
Yeah.
like, as much as enterprise matters, it all trickles down to the customers.
Yeah.
The biggest companies in the world right now are really highly qualified forms of customers, where where the customers are buying what they're doing.
They're customer centric, just like Amazon, like
Yeah,
specifically focused on the customer.
super centric, man. That's the
Yeah.
dollar everybody wants. Yeah.
That makes sense. Cool. And I guess perhaps just for like some parting thoughts here, any specific advice that you would have for, I guess it could be someone just in like the VC space, or it could honestly be just a founder trying to like grow their company. They're looking for funding, but they're just not sure how to get to like that next stage of like their growth. If that makes sense.
I mean, I think that I don't like to give advice anymore, because I think that it's all different. I've seen, like, what works for one doesn't necessarily work for another. So
Mhm.
it's pompous of me to think that my way of doing things is right, because honestly, it's not. It may just be right for me. But
That's
I would
fair.
say that the biggest thing that I would tell the the companies that are in need of capital, which is always the case, is two things. Number one, you got to always be raising capital. Even if you're a public company, you have to be thinking about, until you're fully solvent, where your profits are so great that you don't need money.
Yeah.
You got to be thinking about, when am I going to raise the next deal? Also, I would say that you have to listen to the people around you. Don't fall into the echo chamber of, well, I did this is great, and I did it
Yeah.
myself. You have to be coachable. You have to be willing to listen to the people that came with you and have helped you build. If you did it by yourself, God bless. But there's not many of those stories. So
Yeah.
you have to be willing to listen to the people around you, because probably they may know pain points that you're not looking at. So
Mm.
that's the only advice that I would give to founders. For
Yeah.
VC, I have nothing to say. I mean, everybody's, you know, good
That's
luck.
fair.
I would say that's,
Good luck. You're gonna get crushed in the next few years.
no, I don't believe that. I think that venture capital, the markets, look, I'm a capitalist, man.
Yeah.
Uh, Everybody wants to rag on Wall Street. A lot of things would not happen without Wall Street. And I'm not saying that there's not bad guys and opportunists. Again, as capitalists, opportunities, that's kind of the definition of a lot of what we're doing. We're trying to find that spot, right?
Yeah.
Um, so I would say that I think VCs are always going to be here.
Oh yeah.
It'll be different. The money may come from different places, but I think that the next couple of years is still going to be great for venture capital. It's going to be great for private equity. If you have money, it's always going to be good for you if you have the money to buy into something.
Yeah, that's fair. Great. Well, really appreciate you being on the show, Frank. If there's like anyone that wants to get in like touch with you, is there like any platform you're most active on, anywhere they should be looking at or?
A lot of people are getting in touch with me. I'm good right now. Thank you so much. I would say probably don't get in touch with me, because so many people, like, they bombard me on LinkedIn, man.
Yeah.
Especially after the movie and a couple of articles on some of our investments came out. No, actually, you can go to the website if you're interested. If you have something that you think is interesting and would pique my interest. I'm pretty agnostic when it comes to our investment side of things.
Of course.
It's just, what we do is not for everybody. I would just let everybody know that, although I think going public faster is the best case scenario for all companies that are at the startup stage, um, it may not be for you.
Yeah.
So if you're, again, like a mid journey, why go public? Just stay private, keep getting that cash, and just keep stacking. The thing for companies that are looking for capital though is, if you have something you think is compelling, something interesting, we look at all deals, man. I've had people try to pitch me like it's like bubble tea startups, all kinds of stuff. So
I love
we
it.
look at everything, man.
Perfect. Well, appreciate your time, Frank.